Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep up with our analysis of the euro currency. So in general, our short-term trading plan on the hourly chart has worked. This market has shown the bounce from the resistance level that we have discussed recently on the hourly chart. But currently, there are a few things exist that personally I do not like. I mean, from the bearish point of view. And actually, the major thing is very slow downside action. Usually when the bears take the control of the market, performance stands faster and stronger. So you could take a look actually any downside action that you could see. Well, from the psychological moment, it explains very easy. So I already talked about this, that actually the fear usually that stands upon the bearish market is stronger sense than the greed, which usually supports the bulls. And that explains why the bearish markets very always shorter than the bullish markets. So you could see the rally on the stock market for a decade, but the collapse and crisis will happen for 1.5, maybe 2 years. And this works on any time frame. And if you see the bearish signs that potential bearish signs that have been formed recently, I'm speaking about, just take a look, gap down open, we have the reversal bar, this wash and rinse recently. You suggest that in the market actually bulls, if bulls have capitulated here, it means that bears should control over the market and market should show some downside acceleration, move faster. But right now we do not see it, and that is the warning sign. Using the cross market analysis, if we'll take a look at the gold market, today we'll take a look at it also, you will see the gold market performance on the lower time frame also shows, well, lazy sideways action, slightly sloped to the upside, which is also doesn't correspond to idea of the bearish market. It now start looking more like the consolidation near resistance, maybe because of the overbought on the weekly chart, maybe some by the other reasons, maybe by the expectation of the non-farm payrolls release. But currently, this performance, well, in this moment, I wouldn't consider taking the new shorts position by far. So I need to see that any bullish signs will be eliminated first before considering taking the new shorts. And if we will speak about this even from the terms of the double repo pattern, yes, we have the second close below the 3x3. I will show you. But the performance of the market doesn't correspond to the idea of the double repo. Double repo suggests that here is control of the bears, capitulation of the bulls, and acceleration down. Here we do not see it. So maybe a situation will change tomorrow, on Friday, but right now, personally for me, the background is not sufficient to consider taking the new short position. On the 4-hour time frame chart, we also have few interesting moments. Yes, we have here divergence. Nicely looking bearish divergence that suggests the taking out of these lows. Everything is okay with this evening star. So Washington Green's bullish pattern stands, well, nice. But take a look at this performance. Hardly it is possible to call it as a bearish, normal bearish performance. Tight downside channel if we ignore this splash up. So actually you can see this really tight price action with small candles, very gradual. So this is not the starting of the bearish action, at least right now. Maybe, as I said, later something will change. So what we could consider currently, if even we will not get the upper reversal and upper breakout, this potentially could happen. I am just think that we could get at least minor upward action here. This market is not ready for major downward action yet. On the hourly chart, for example, let's take a look. Market right now stands at the 618 support, forming some kind of the wedge consolidation, forming bullish divergence. That also suggests taking out to the stop. So, and here I still think that it might happen that we could get some kind of the ABCD action to the upside above this top, so it might be to the 618 resistance of this drop, and after that maybe downward action will start. But currently at this point, despite that yesterday everything was okay, so you can see it's what 30% resistance we said as the area you could consider for taking the short position. Market collapsed, now you could move stop to the break even, but for taking the new short position, this current combination, well, have too many weak moments for taking the short position, and I prefer currently to wait, see what will happen. So that's actually what we have currently on euro currency.